What are you doing today? So I just got done getting the update on the Fed decision. So plus 0.25%. That was my guess. So I was right about that. That's pretty cool. But apparently a lot of people were guessing that. So more than I thought. Here's where I'm sitting at today. I picked up just one of each of the stock just to get it on my look here. But they're REITs. Arbor Reality Trust, and NLY down here, Annaly Capital Management. So those are the two REITs that I decided to pick up because of the dividend that I will show you in the next one. Right now in my account, I have $323 cash, which was just from some dividends I received. So that's pretty nice. Today, Zim company is doing pretty good. You know, it makes you kind of wonder with the Fed hike of 0.25%, making it more expensive for the banks to borrow money, which is good, in my opinion. Yeah, you know, everybody's talking about recession and so forth. I don't know all the details of that. I have a little bit about my own thoughts here, and I'll share them. But you know, when it comes to is it going to affect Zim and stuff like that? Well, Zim might go up real good again if, you know, things are stuck in ports like they were before, right? So if people aren't buying stuff, you know, on the concept of recession, then these places still have to pay for storage, you know, like they did before. So this could be good for Zim, you know, just on that note. I don't know. Like, that's just my thoughts, you know, and then if people are buying items and Zim's transporting goods, since it's an integrated shipping service, you know, across the oceans. Either way, I think either way it goes, you know, it could be good, you know, it's going to be good for it anyway. Because one, it was highly undervalued to begin with. Two, if, you know, shipping stuff is halted or things skyrocket because of the shipping stuff like it did before, which I'm assuming that's why the price was so high, you know, a year ago or whenever it was, that could be that, right? Yeah, here I was just putting where the companies did today. Zim, obviously, the biggest one, $1,000 up. The market's just closed a little while ago, so I'm sure people are taking their profits. But, you know, if you think long term, like I just explained, I'm not taking out my 2,700 of my position right now. I obviously, you know, and I want to get the dividend. You know, I've been talking about that. But yes, I think I'm keeping it there. You know, this number could hit, depending on what happens, it could hit like, you know, 40 grand, maybe even go more than that, depending on how things unfold. And I'm no, you know, genius by any means to be able to make good predictions on that. But yeah, here's where we are. Some things looking all right. See, where's Amazon at? That's something I was looking into today. So it's down $20 today. But that one's a hit or miss, you know, because they're laying off employees and stuff like that. You know, people, are they going to have money to, you know, use credit cards and so forth to buy a lot of stuff online? Because a lot of people do that. It's part of that big consumer base, in my opinion. But I don't know. We don't know. I mean, Amazon, I actually have that brought up, so I'll go into it. I have some things I want to show you all that I've been thinking about and I like to share it. And here I'm just simply wanted to show the dividend side of it, you know, with the yields. So that's why I picked up those two, because I like the yields. And also, if you search these up on Google, they have some pretty nice market caps, and then the PEs aren't too bad. So it's something that I'll look at building and so forth. And another way I was looking at it is I want to be able to get dividend income on different months. And since most of these, it shows the pay date to be April. Well, actually, AG&C pays monthly, I believe. So that's when it does that. But there's some other ones here, like this one will pay, you know, this month, which is March. And then I think actually PBR, get into that one. If it continues to do what it does, once it updates, it'll be paying in May. So it's kind of what I was doing here. I want to get good dividends paying every month also. But with things the way they're going after the meeting, which I had to watch some I'm watching YouTube videos from other folks, so I'm not going to take their content. I literally just what I thought about it. And I was thinking I was going to go 0.25, so I was like, cool. But yeah, so building these positions here, these, all this on this side is good because I think that bank stocks are going to go down, and I've already started looking into this. Obviously, because they're charging them more money to, for the banks to borrow, to lend out. A bank's job is to make money off of interest, kind of like what I'm trying to do here, right? So I think there could be a really good opportunity for bank stocks. And I'm not a big bank stock person myself, but if you're getting in it, really, really cheap, then it's worth it because you're going to need banks. That's just the way the world works. The world needs banks. But I want to get into them at a really good price. So, yeah. We'll go into some stuff I was looking at here. And starting, I'm just taking note that, the banks are, the markets are starting to go down. They're reacting off of, the Fed hiking the interest. A lot of people are like, oh, no. Well, they probably got a lot of money tied into these banks. And they probably, we're taking like loans on loans, and leveraging debt, stuff like that. I'm not really in any banks. So for me, this is a great opportunity for these to go down. Bank of America already has an 8.68 PE ratio. You look at several other things too. Look at their balance sheets and so forth. But pretty good. So the more that goes down, the more the dividend yield goes up. The more the PE ratio will go down. That goes down, div goes up, so forth. Great, because they are going to rebound. But you look at the long term here, yeah, these might go boom, 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 and come down into this 20 range or even less. That's where it's appealing to me because I'm not a big bank person because, like I said, I think banks just, they're irresponsible, But for the right risk or for the right reward, I'm willing to take risk. Okay, if we look at JP Morgan, you can see same thing. Bank is going down. Price to earnings, all right, 10.52 dividend yield. I will start, watching these, and if these go, in the way I want, I'll be interested. Wells Fargo, it's down 11.83. Again, I'm gonna watch these now, because those numbers go better and better. I'm in for it. Some things I was thinking though. Here's some of what I wrote down. It's like since banks is more money, more expensive for them to borrow, they're going to be lending less out. So I think this could even affect people. The housing market already being high, right? As high as it is. And I know it's high because my girlfriend's folks bought a place. We're going to be moving out there, taking our buildings that we have, though, with us. We're not buying a house. We're literally getting like an acre off of them. And we're moving our stuff out there. Still keeping it cheaper, but it's more privacy and stuff. We got our reasons to why we're doing it, but it's still way less expensive than the housing market is now. But I think that this is going to cause the housing market to go down because I think it's in a bubble. I think it's been in a bubble because if the banks aren't lending money out and it can't be guaranteed to get it back, I'll just sum that up real quick with the 2008 housing crisis. There's a lot of movies about it and so forth. That's what happened, with all that. And since the Fed's like, no more, the banks are going to be like, okay, well, we don't have a bailout, and they're charging us too much money for this. Unless they bailed them out. I haven't looked into that. I don't know if they bailed out the Valley Bank, or another bank I think was having problems, right? I haven't looked into that. I know about it, but I have to look into it more. So I think the housing bubble, which is what I'm saying, is going to pop. I also think other things like, what was I looking at here? So I was looking at energy stuff too. So it's like energy stocks are still way up, so big hedge funds, and big investment trusts, so forth like that. I think they're going to be pulling their money out of the banks for the reasons that I just showed previously. I think they're going to be like, okay, well, the banks are going to go down. Let's take our money out so we don't lose money and they can buy back in later, right? But I was like, what do you think they would buy? You get your recession-proof stocks like Johnson & Johnson, Duke Energy, any energy stocks really, and then you have Walmart, you have waste management stock, Walgreens. I already had this up here just because it was something I was looking into. See, everything's really starting to go down. This could be everything goes down. This would be a great buying opportunity, which is a big reason to buy those high dividend yield ones that we've been doing, and like Mr. Dividend Bull also has been doing for a long time. It looks like his account's been going for a long time. So I was glad to got recommend to check that one out. But everything could go down, or there could be some stocks that go up. I'm considering actually playing a bet here on Walgreens because this is one of those ones where it's a recession-proof stock, kind of, in a sense. And then you look at the max here; it's way low. There's no PE ratio because they haven't been, getting good earnings and so forth like that, right? So at least that's my theory, and from what I've been, learning. So you're literally buying in at no premium because, they haven't been doing that much earnings. But, in my opinion, some hedge funds, and other big investment firms that, make money off of, indexes, whatever, make money off of, the stocks they pick, I think they might buy into this, make this go up, and then that PE will start coming back simply because it's a recession-proof stock. They don't actually have to be making money at all. I mean, Tesla wasn't making jack, and then they started going up, and then they're just literally looking at the profits from from the value of the company going up. Not really the dividend that they'd be getting or any of that, but I think they'd be looking more at the money they're making by other people buying into it because of what could be a recession coming, especially if the Fed keeps going the route they're going. And if they're not buying stuff like this, I don't think they're going to buy any energy companies because, look, Duke's already way high. And if they're not buying into stuff like that, then my next best guess would be that these companies are going to hold cash, which is, I think, what they did in 2020, and then the markets are just going to go down like they did in 2020. That being, we'll just go with, let's see if this shows. So, yeah, so there's a little dip there that you see. That was a 2020 thing. So if they don't buy any recession-proof stocks or anything like that, like Walgreens, which I think is, a possibility that something could happen there, depending if everything keeps going the way it goes, then I think this just simply means that companies and hedge funds and all that are holding their money. They're not buying anything. That's why everything goes down, in my opinion. And that's literally the definition, to me, of a market crash. Nothing's going up. Look, here's a big drop off. So, boom, look at the Dow. Boom, it's going on. It's starting to do its thing. So we could start getting into some good opportunities here. And you even look at Amazon here. Which I'm sure all of y'all have heard. Many of you have heard. Amazon has laid off 9,000 more workers and additional cuts. All this stuff because, as we said before, employees cost money. Insurance, their wages, all kinds of stuff. 401ks that they might have, etc. So if people aren't going to be getting money from banks, for credit cards, etc. or whatever, then they're not buying. And then if they're not buying, then the sales, the earnings, Amazon's balance sheet and all that, it's going to start looking way more rough. Investors are going to start pulling out, especially because of the banks and everything, and that hedge fund's doing it. So how are they going to save money and keep, all that? Cut workers. I think Amazon is predicting a crash. I think that's honestly what is fixing to happen with that one. So, like, you go here, we go Amazon stock, which y'all know I have like 30 shares. So it's even going down, see? And I think Amazon's like, all right, well, we might not hit sales if people aren't buying, if the, inflation and all that keeps going and we get into a recession. So they're cutting workers. They're preparing. And other places like, okay, I wonder what Meta is doing. Let's see. Okay, Meta's way down too. And we all know that it had a little, it had a good rebound because, Zuckerberg, he was like, yeah, we're going to cut back on the Meta thing and focus on what we're actually good at. And he definitely needs to do that with the possible recession we're fixing to walk into. For me, it's not so much a scary thing as I am looking at the opportunities that I'm going to make there. The only thing that I'm going to be looking at is when it comes to the REITs here, since they're really, real estate stuff. Some companies might close doors at some locations, some shopping centers and so forth, which can cause the REITs to make less, and then the stock might drop a bit. But then, depending on how the dividends go up, it could affect dividends too a little bit. But since these are really good dividends, even if the dividends go down a bit, it's still not that big a deal for me. But I'm still going to be looking at, these banks and stuff like that. So that's crazy, right? I mean, there could be big opportunity fixing to happen. So that's some of my thoughts. And I was thinking, you could look at Procter & Gamble, Johnson & Johnson, recession-proof companies that they might buy into just because they're going to be making money. If they don't buy into them for the trend going up, they're at least buying into them for the dividend. But it looks like everything's going down. So I don't think these funds are looking to buy for dividends. I think they're just going to hold cash. I think probably the markets are going to go down as long as the Fed keeps putting those interest hikes in. I think they will continue to, because they got to burst the bubble for the housing. Things can't just keep getting to the point where it's impossible for consumers to consume, right? A consumer can't consume if if everything's too expensive, because that'll just throw off the balance of rich, poor, middle class, so forth. The middle class has gotten hammered, in the recent years, and it's just too close together. They can't take another beating so soon. I think that might be what the Fed is kind of looking at here. It's like, look, the rich people benefited off of this last, thing. The middle class got beat down bad. That we can't beat them that, constantly back to back. And I think the Fed knows that. So my thoughts are, that's what's going on there. I think banks are going to go down. I think the housing market's going to burst. I think REITs might take a hit. Personally, I'm still going to keep the REIT stuff that I'm looking at. When it comes to stuff I want to look into buying, again, Walgreens, because it's already way low, and it's a consumer stuff like that. So, you never know, right? Obviously save cash too, like other people, because then that gives you the opportunity to buy into these bank companies when their reward is worth the risk, right? Otherwise there's no reason to do it, and because I think banks are high risk. But I do think they will get bailed out. They need to. But you want to buy in on that, around that bailout time. That way you ride it up. But, okay, so Walmart's down. Let's see. Waste management. Seeing what some of the things are doing. So everything's going down. Okay, people are getting prepared. They're taking it out, it looks like. They're just taking it out, and they're going straight for holding. This is huge. But here's the thing. What do we think? Okay, so I'm going to go back to the Dow here. We can look at this. So, I wonder, what do you think is, if you do want to buy, what to get into? I might just hold quite a bit of cash. Because before I was saying PBR is what I want to look into for more cash and so forth. Well, given this news, if things just keep tanking, I might not get into PBR come April. I might just wait, hold that cash, so that way I can wait for a good opportunity to start getting into some of the banks. As long as the risk to reward is something that I feel okay with. So I think auto sales and stuff would go down too, but I don't really know. I'm not really into a lot of auto stuff. I mean, you got Ford. Let's look this up real quick. So Ford stock, real fast. See, boom. We might see a 2020 here where that goes down to like $5 or whatnot. Who knows? There's a lot there. Wow. So let's see. General Motors going down. Look at that PE, 5.55. That might go, because people aren't buying if they can't get loans from banks. So we might be getting a really low PE there and a higher dividend yield. There's a good opportunity to get in some good companies, real good ones. But obviously, I think 5.55 is a pretty decent price to earnings area and all that. So, yeah, I don't really mess with General Motors too often. I'll be focusing more on the companies like, I was talking about like Coke. But Coke, come on. Coke's not going to really dip. Unless people want to pull their money out of Coke. While Coke's way up here, people might say, okay, let's pull it out now. And let's get ready to buy into these banks when they get low, ride them up, take the profits, and then buy back into Coke in 6 months, a year, or whatever time it takes for them to rebound. So even Coke might get that drop off. And if Coke gets a drop off, I'm definitely nibbling at this. If Coke starts doing what this did and gets down to the 39 or lower, I am nibbling because that's an opportunity to get into that gold mine we were all talking about. Just saying. This is pretty exciting news. I mean, even though, people hurt, it's kind of like, okay, because people lay off banks, but I really don't think you should lay off a bank anyway. I understand mortgages and stuff like that. You got to do what you got to do. But obviously, I don't live in a fancy home. I mean, look at behind me. This drywall is not even muddy or anything. So. But I'm gonna take advantage of these possibilities here. The stock market casino. So much fixing to happen. So much opportunity out there, guys. I'm gonna be following this quite a bit, and when I do make some moves in this, I'm going to be posting about it. So far, like I said, with my account. I just had that 300 and something bucks. I only bought one of each of these just because I wanted to watch them, but I'm going to see what these do because they are REITs and looks like everything's going to be going down. So my next bet, that's kind of cool that I was like, yeah, 0.25, I think that's what happened. And for the reasons, I think people need to be checked on it because people are living too much off the banks and the banks are living too much off the Fed. And the Fed is like, look, people got to work. And then the argument that I don't even quite get is people are saying, oh, well, that's going to kill jobs. Like Amazon laid off 9,000, for the reason I explained. They're probably preparing for this recession. But how are you going to say that that's, by cutting money and all that, it's going to kill jobs? Like, Amazon and all that hired way too much, with stuff anyway. And the reason they did that, in my opinion, is they were hiring all these people and then building, doing whatever, saying, oh, look at the growth, look at the growth. It wasn't real growth, though. Because they're firing them all now. It wasn't real growth. They were literally getting free money almost from the bank because the bank wasn't being charged. They were getting it free from the Fed. And now the company's going to go down. I look for real growth, and I think price to earnings, low PEs and stuff like that, and these things help you find real growth, not what I would say manufactured growth. Amazon, I'm not quite sure what it's going to do. I'm going to be watching it. I still, depending on what it does, if it starts going on a downtrend, I might just sell out my 30 shares, take my $400, and wait for it to come back again. I really don't know what it's going to do. I know it's preparing for that, but we shall see. So it's kind of my thoughts on all this. I'm going to go ahead and say that I think companies are going to go down. And I think hedge funds and so forth are going to start pulling money out in preparation to buy in lower. And I think we're going to start going on a downward trend in the markets with stuff. I think if certain things do stay, sideways or do go up a bit, it's going to be things like Coke, Johnson & Johnson. Some REITs might, depending on what kind of REIT it is. If it's like home, like rental property, so forth, for people that, normal people that live in them, those will still probably do all right. But some of them that are like, commercial REITs, they might take a hit. But like Coke, stuff like that, Walmart, McDonald's, I don't think they'll be impacted, but I honestly don't think they're going to really go up. I think people are going to be pulling money out. A lot of things are going to go down, and they're just going to hold the cash because those other areas are still expensive. Or they might take those out and then prepare to buy into the banks later. I really don't know. But I think that, we're going to start seeing the market crash, the correction that needs to be done. So get ready to buy into some good companies, y'all. So I hope you guys are saving some money and, you're buying this stuff and make good strategic moves here. I'm going to be looking into, paying close attention to everything and see what happens. And when I make, pretty good strategic moves, I'll let you know. Again, I'm not sure if I'm going to jump into PBR next month when I get that dividend just because of what the markets are doing. and there's other ones that I might be willing to bet on. Even though PBR still does pay a really nice dividend, I still might wait because the opportunities to get into these other companies don't come up near as often. So it's kind of my thoughts. Good luck out there, and next time I make a big move or I have any thoughts of companies I'm looking at that I might get into, I would definitely let you guys know, so that way if you have interest in it, you can jump on board too. And we'll catch you in the next video. So I'll see y'all later. Have a good one.